MacKenzie Sigalos has the details. MacKenzie?
Hey, Kelly, that's right. And what's notable here is the shift in priorities. Strategy liquidated $750 million in shares this week, not to buy Bitcoin, which is usually the move when prices dip, but to add to a cash reserve that's now at $2.2 billion. They set up that fund at the start of this month specifically to cover preferred dividends and debt interest without having to sell any Bitcoin. Now, the stock, it is down nearly 50% year to date. And you can see why Chairman Michael Saylor is playing defense. Strategy is now trading at a discount to the Bitcoin on its books, meaning that investors can get exposure at around 80 cents on the dollar. That breaks the model. The whole playbook was issue shares at a premium, buy Bitcoin, and then said premium justifies itself. But when it vanishes, issuing shares becomes dilutive and the flywheel stops. Now, the next test is January 15th, MSCI deciding whether to boot Strategy from its indexes. JP Morgan estimates that could trigger nearly $9 billion in stock sales if other index providers follow. And it is not just Strategy. The broader digital asset treasury trade is unwinding. Bitmine Immersion is down 80% from its summer peak. So is Metaplanet in Japan. Same playbook everywhere, same problem. When the premium disappears, the model breaks. Kelly?
I mean, look, this was obvious, as soon as these companies decided to go this route. We had the CEO of Strategy on not long ago, and I thought he said it was more in the low 70s that they would eye making perhaps a bigger change. So they've got a comfortable cushion. A lot of their purchases were made at much lower levels. But as you mentioned, the higher beta plays on all of this. I mean, it's up to Bitcoin to prove, like Tom Lee was saying the other day, he thinks it's an 8-week shakeout still from whatever happened on October 10th, which he thought was maybe a big liquidation event or something. And if they can find their footing again, then we can talk about the trades taking off again that rely on that. But in the meantime, it's hard to see why it makes much sense.
Yeah, and a lot of the conversation from the strategy side of this is looking at two different things. One, they still have that buffer between the acquisition price of Bitcoin. It's an average of 75K versus the 89K where it's trading today. So it's a much smaller margin than it used to be. But they would say we still have a buffer there. And also their debt is long dated and doesn't start to mature in large blocks until 2027. The argument that they've made is that even if Bitcoin dropped 50%, they'd likely restructure before liquidating. But of course, we'd see an erosion of confidence in the trade if that's happening.
All right, and we'll look to see if that does happen on the index front. MacKenzie, thanks very much.